What's happening, guys? I hope everybody had a fantastic weekend. We've got another Sunday scan coming at you. This time it's the last week of March, first day of April towards the end of the week. And the market continues to really just go sector to sector, which for me, I absolutely love it because, you guys know that I talk about how my trading has sort of shifted away from, the small caps and the low float type names, which, I still trade, but just not in the capacity that I used to, just because, you're one swipe away from making a really bad decision. There's a lot of games that are played. There's circuit halts and all these different things that can really, no matter how well you perform 70, 80, 90% of the time, it's that one outlier that's going to catch up. And, as always, it's always the one that you're oversized on. So for me, I still focus on them, but just not at the same level that I did prior. And, one thing that's great about this current market, right, where we have AMC and GME and even Tilray this past week, is everybody takes their eyes off all those small caps because all these other ones are running. So when they have these big gap ups, most of the traders are paying attention to them pre-market and then taking them off radar. And so that's really brought back some of the old market where you can kind of scale into a trade and let that trade unwind throughout the day, which has been fantastic. You guys have seen a lot of those full day unwinders where pretty much 9:31, 9:32 a.m. ends up being the peak. It's just whether or not you've behaved pre-market to be able to, establish that, there was a big exhaustion move right off the open and, that was the top. So hopefully that does continue. But like I said, my real focus in the part where you can kind of exponentially grow is when you've got these sector moves. And we've been pretty fortunate to go from this crude sector move into, I'll call it the meme kind of sector move where, you've got AMC, which was, pretty much unlimited liquidity to an extent. Obviously, if you're trying to trade, a couple million shares, then, good luck. But, and GME as well as all the other trades that, kind of come off of that. So, that for me is fantastic because it's real liquidity. It's not newsletter driven or, for example, a Discord driven where there's just this one large amount soaked, and as it moves, that comes back out, and you're right back to where you started. And the difference is that it's real liquidity, real momentum, and it just starts to churn and churn and churn, and we have those multi either day opportunities or kind of multi opportunity, I guess intraday opportunities is probably the best way to put it, where you literally can score off the open, and if you're good enough, you can flip long. That's something that I should have done on Tilray with the covers that I had. But it's always a work in progress, and that's something obviously that I've been working on for some time. But a couple notes for this week. I think one of the first is just don't let the obvious blind you, right? We all know where something's heading, and we all know what something should do. And the more people that kind of come to that conclusion, as you guys know, the more crowded it gets. And so what happens is you have to kind of rotate out that crowd before that ultimate, fail happens. And, I'll go over that, but MULN is a perfect example of that. We know where it's going. We know that it's a trash name. We know that, most people are going to end up down 50, 70, 80%, just like every other name that runs like that. But the key is to not lose it off sight, which we were talking about on MULN. And it's just like BKKT and TMC. I compared it to those over the last week or two where, everybody wanted the piece of BKKT, the last run, and everybody wanted to score on TMC. But you just kind of have to let that trade kind of unwind by itself, and then you'll have that secondary move. Because if you think about it, everybody's already short, everybody gets squeezed out, everybody reshorts, and then there's that kind of time that has to work those shorts out, the longs out, and over time, as the cover is done, there's only bag holders left. And as you guys know, the rest is history, and down we go. So that's exactly what happened to Mullen. It just took a little bit longer than people wanted, and the facts are it was an obvious trade, an obvious short. So everybody was already there. Everybody already knew, and then they got squeezed out first because they didn't respect trend. They didn't respect the grind, and it was about not pre-exhausting. And yeah, I could have definitely done a lot more. Eric did fantastic on the backside of the trade. He's really good at letting that thing exhaust and then actually sticking around rather than just kind of losing it off radar. So nice unwind there. But again, any fast moves are going to have that probable knee-jerk reaction back up. A couple other notes. Don't get lost in the noise. Noise, I would say, everybody wants to nail AMC. Everybody wants to nail TLRY, right? So, make sure that it fits with your personality. Don't just do it because somebody else is doing it. Don't just do it because you think it's the right move to make. Don't just trade the 200, 300, 500% runner because, it seems like the right thing to do. Most of the great traders probably don't even have that on radar because they're focused on high probability setups. They're focused where they can actually scale in with real liquidity. It's not about just kind of nailing this trade and like, yes, I got it. It's where can I actually position and let this trade work for me? And most of the time, those ones that, get your attention and get you all excited are not the answers. All they do is, sure, maybe they provide a decent trade here or there, like a smaller one, but they take your attention away from everything that you've been prepared for. So be aware of that. One big thing I think was this past week and the week before is don't go back to the well just because it paid you well before, right? So for example, AMC and Tilray, there's days to scale. There's days where you can really just sink your teeth in and really scale to levels that you would never trade on any other day. But for example, with Tilray, when it trades 300 million shares, maybe your size would be actually 10x or 20x what you typically would trade on that name on any given day, because there's an opportunity there, there's liquidity there. But understand that when that volume dies off, when the range tightens up, if you're still trying to force with that size just because you kind of broke that barrier, which, as a trader, you should always kind of break different barriers to kind of test and see how you react and see how your emotions are, right? Because that's what's going to make you kind of comfortable getting to the next level. But if you get too comfortable and you're too sized and you don't recognize that, yeah, it's only trading 50 million shares today and it's not as liquid and it's a lot more choppier. Meanwhile, I have the same risk as the day before when it was trading 300 million shares. You've got an outsized risk there. And when something goes, the way that you're not expecting, that hurts. So just be aware of that and be aware of just because it paid yesterday, don't just go right back to it because that's where you get in trouble. That's where I've gotten in trouble a lot, where, you absolutely score and you think you have this great read. Yeah, you had a great read the day before. That doesn't mean that it's going to carry on to today, right? So sometimes when you're super short biased, a lot of times that's just a gap and a sell-off. Let sellers come out, let shorts come in, let new buyers come in. Next day, a lot of times it will float right back up long, just like NKLA, for example, or AMC, for example, where, couldn't find a bid the day before, next day it's back towards the highs. And if you go in with the same thought process and you scale in the same way, you're going to get beat. So just remember that you prepare for these opportunities, and it's all about, going to almost like new names each day where there's that edge. Each day I come and there's two names that I'm prepared for, and I usually trade those around, a 2 or 3 day period max. And there's one day that I might have outsized risk on them based on, the opportunity, the volume that's already traded there, the liquidity. Couple other notes, and then we'll get right into scan. Volume trumps all. We talked about that. So, you've got this huge, and also catalyst gives bids. They kind of work hand in hand. So volume trumps all. We talked about that last time with the sector trades, right? So you've got something like Tilray, which trades 300 million shares. It traded 150 or 200, and then it traded 300 million. So you've got this stock that's literally 80, 90% off highs, and you've got this new kind of blood coming in, these buyers, this bunch of shorts because it moved too fast. But you also have this catalyst, something that's coming. That doesn't mean that any of this volume is going to mean anything in a week. If it gets voted down and it completely comes apart, you know, and that's probably what's going to happen. And maybe it doesn't matter. Maybe they don't care. But there is a good chance that, you know, into this catalyst is going to be the trade. And then after that, people are going to start to take it off of radar. And then you're going to get the trade that you were prepared for. But, you know, it's kind of fallen off your radar. So just kind of think about that, but just understand that when the volume comes in, and you can see that on AMC, you could see that on all of the crude names, you could see that on all of the pot names. When the volume comes in, and it's just this maybe 6 times normal, 10 times normal, 20 times normal, be aware and don't fight that stuff, because what's happening is, you know, something like Tilray, you've got this huge gap and huge unwind. They let anybody that wanted to sell out, shorts in, and then they just slowly squeezed it back, and they just squeezed the intraday shorts out. Probably gaps down, probably unwinds, and does what you wanted and what I wanted towards the end of the day. But you have to be respectful on that front side of the move. And yeah, so the last two I was just going to go over and kind of show you a little bit about the levels and the importance of it. You guys see it every single day in the room. And I give my levels where, you know, if I am going to short, you know, on the front side, I'm not going to size into that trade. It's just not for me. I've been there plenty of times and I've lost plenty of money. The only times that I will size into a trade is some sort of parabolic move where I feel like I have an edge with a reactive trade, which could be the front side, but it's something where it starts to really speed up relative to prior price action, or on those levels, I need to see them fail to follow through. And so, for example, you know, Tilray, and I can go over that, but Tilray was a great example on Friday where 820 was my level. And let everybody else kind of figure out, you know, short 820, 830, 840, 850, and blow out at, you know, 855. And then watch it, you know, pretty much come back as it did after hours. So for me, I want to see, I have no problem taking a small position, but if I'm going to scale, if I'm going to actually put risk on, I need to be on that right side of the trade. I need to see that other people are trying to sell on pops and they're not getting filled, and sell on pops, sell on pops, sell on pops. And each time it comes a little bit lower. Because that's what's going to give you a better risk reward than jumping in on the front side. You don't know how emotional people may get or how thin something may get, right? And that's when you've got the Cloves, the AMCs, and all these other names where they just kind of open up like crazy. So, you know, you don't know if it's going to go 850 and all of a sudden just shoot to 920, 950 and skip all your stops and you're screwed. So keep that in mind on the front side. Same deal on AMC. You know, there were trades that I missed on Tilray into the close right after CNBC on Friday. You know, I had a starter on, but I didn't get what I wanted to see for a scale of any size. So I missed a good opportunity, and it did fade, but, you know, it just wasn't set up in the manner that I was looking for. And the same deal with AMC, the big day. You know, I was being patient and waiting for this trade to kind of break down. And yeah, I could have taken on risk into the strength, but I was trying to look for the bigger picture and wait for it to turn. And unfortunately, I missed an opportunity because, once again, it faded after hours. But I was safe. I'd rather be safe and wish that I was in the trade than wish that I was not. And I think you guys know what that means. Sometimes when you end up in a situation and you're like, oh, I knew to avoid this, but you had that FOMO and you wanted to be able to take, you know, part in whatever way you were thinking it was going to go. It wasn't an optimal entry, and, you know, you caved. So be aware of that. All right, guys, as always, I am not a financial advisor. These are not buy or sell recommendations. This is for educational and informational purposes only. If you're not okay with that, shut the video off. If you're okay with that and you want to understand, how and why I think a trade, is setting up in a particular way and where there is an edge and where there isn't, and why that could or will interest me, you're in the right spot. That's what this is about. It's not about, some places where, they'll tell you what to buy or to sell. I put out my thoughts and what I think would make a good risk reward trade. And if you see that trade and you see it kind of setting up and you see it coming to your levels, then you potentially have a trade. But, there's just so many folks that just want to be told what to do out there that, you're gonna end up getting hurt. And, you're never actually going to develop skills on your own to be able to say, I can do this by myself. So, this whole trading career, this whole profession is about identifying what type of trader you are and not just copying somebody else and not just, kind of following the leader like so many people want to be told what to do. So that's why we do things a little bit different. And, you don't see us telling you what to do. And, hopefully you're actually becoming a much better trader because of that. You see, how things react at certain levels. You see how important those levels are. Every single day I go over those key levels. And the reason for that is to kind of see, how they react against certain levels and where there's an edge and where there's not. And a lot of times you'll see that just kind of waiting for things to come to, where they need to exhaust out will keep the headaches away. It's not about always getting into the next trade. It's about simplifying and trying to figure out, the best way to make the most with the least pressure, the least stress, least emotion. And look, maybe some of you guys want all that. Maybe you guys want, aggressive and super stressed and push until you can't push anymore. And that's fine. But for me, those days are over. I'm just looking for smart, high probability setups. And that's that. So as far as like Mullen, you can kind of see these all follow the same process where everybody's on the same side. Everybody knows the same thing. And it comes to a head where there's this exhaustion day, right? And you can kind of see that it peaked out versus those prior highs. You could go back and look and suggest that it could have peaked out here, here, here. So I'm not suggesting that this is all like, oh, in hindsight, it's easy. You could have seen that it would have peaked there. Not at all, because it could have kept on going. But what I want you guys to see is that they follow a very similar pattern. And, you can see BKKT did the exact same thing. Then they had that blow-off day, and then, everybody's exhausted. Everybody's exhausted from this blow-off day, and then the unwind comes. And same deal, the other one that I was comparing it to was TMC. And here you are, you're back to 150. And you know how hard it was to, try to find the top here and be patient as it was, trending up. It just kept on going and going and going. But if you let it do its thing and don't try to be a hero, you'll start to see a little bit of clarity. There was a lot of resistance each time over 3. And then as it finally breaks down, the much easier trade comes. And so Mullen was no different. The most obvious trade was the short trade. And, here we are. After everybody kind of got blown out, everybody comes back in. Then there was this blow-off day where they kind of recheck in with traders. Are you too sized? Are you too aggressive? And then you obviously see the unwind. And that is just the process of shorts covering, shorts moving on, longs kind of dip buying, and then longs realizing maybe it's not a smart idea to keep on dip buying. And as you guys know, most longs will still be long under $1, and that's okay. But that is the process, and that's what's happening. And of course, every now and then there is an outlier trade that people are, I told you so, it was going to go. Sure, those work in maybe 1 out of 100 or 200 or 500. I don't know the statistics, but there's always going to be that one that people will hang on to and say, I told you so. But if you are looking to, have a career at this, if you are looking to be successful at this, you, in my opinion, should be trading on the side of probability. And obviously, it's not probable that everything is going to the moon like Twitter may suggest. So you've got another example here on this AMC, and we were just kind of talking about it in the room and certain key levels all week. And you can really start to zone in on particular levels where you could start to see, a breakdown forming. And you've got pretty much this, 2060 level is the level that we used in the room, where it starts to peak out, and then you start to have the unwind. And then all the, obviously up here, 2180s, you can kind of see this top that's formed. But here's the thing, if you're always shorting into that top of the channel, and this is the same thing with Tilray at 820s on Friday and all that kind of stuff, if you don't have a buffer to be wrong, you've got to let it exhaust out, because again, everybody probably sees the same thing. Everybody thinks the same thing. The difference is, are you too sized up ahead? Are you trying to find the top? And most times you'll see that there is that one candle left, and you can see the volume associated right here. So this was a huge, exit for somebody and a huge cover for somebody else. That was the final exhaustion move before, you saw it come back. And then we had on Friday, we had the same kind of levels I had posted in the room. And I mean, they pretty much were peaking out at that same 2060s level right over here. And then you kind of look for where the support is, and that was right around $20 per share. So I'm always looking for where is the level that it's hanging around. And even if you go up here, doesn't mean it's going to be right every time. It doesn't mean that it has to peak there. But it's just, where should you not be emotionally tied to a particular name? And if you're positioned at 21, say 60, and you're oversized, and you can't go through that 2180 with any conviction, then you probably shouldn't be there with any size. And that's why these kind of levels help quite a bit. And same thing with Tilray. Tilray, we went over the levels, and much cleaner, much clearer. You can see that there was pretty much a peak in the 840, 850 level. You can see that there was some support at the 820 level. Let me just put that 820. Let me zoom in. So you can see that there was a lot of, almost like a magnet around that 820 level. And, that was the key after hours that I first had identified. In the morning, it was 810, 790s to 750s. And so that's why you saw me, I let it, come down, and you're not always going to get the bottom, but I let it come down, and it came back up, came down, it held a double bottom. So that's why you saw me go ahead and cover. And I covered about 60, 65% of it down here. That was my first cover. And the reason for that is because it was the first moment that it actually held a higher low and started to firm up. But same deal, 820s was the same level from earlier. And so, even if you are anticipating the trade, 820s is your level. So if you are scaling into the trade, again, same thing I said earlier, the edge for me personally is if this thing were to have a parabolic move, or after it comes back under, and now you know that all of this volume, all of these buyers, all of these covers happened, and now you're back under that 820 level. So you have all those shorts have already covered. You have all those sellers that sold to the shorts are out. So you know that it's going to be a heavier name from that point forward if 820 finally confirms your original thesis. So that's sort of the concept as to why. And so that's that. So let's get right into the main watches. First off, CLVR. Crazy move. This one was another one where, end of the day, I had posted in the room, there was actually two fails, two big stuff moves. But, in the room, I said, they soaked it. So for me, that level that I gave the room was 310s. Whoops. Just go ahead and put 310 in. This is a trick, by the way. You can double click the line on DAS and then type in the price, and then you can see it. You can see over here where you had basically a stuff move and then slam back down, and then another basically stuff move, but it came back and reclaimed that 310 level. And so to me, you see that huge exhaustion move, but what matters most, and we talk about this every single day, because this is different than in the past where you see that stuff move and then there's a huge fade, right? The biggest difference, the biggest change since, say, 2020, 2021, when there's so much volume, so much demand, so much liquidity, is a lot of times those stuff moves are actually shorts coming in, and it's just whether or not they soak it. And if they soak it on the next try, which they did, and they hold that key level, then all of that volume that you saw is probably going to have to come back out. So that's what I wore in the room, and I said, until 310 peaks out, be cautious. It feels like there's a lot of oversized shorts. And, you saw basically that unwind of the shorts, into the close. And it was huge squeeze out. And I think at this point, we're going to have a nice little fader on Monday off any strength. But that's not easy if you're trying to find the top. And this is exactly what I'm talking about as far as being thin. So, you might plan to risk 320s, 330s, all of a sudden it's 4. You weren't expecting that. So they're always thinner than you think on the front side. So just be aware of that. One other thing too with Tilray, I guess I should probably, I went over my plan. So basically higher the better on Monday. And the levels that I'm interested in would be something like anything over 380s, blow off to like 420s, and then 350s you can kind of see is the new level of support. So until that level confirms, if I were to react, and I've talked about this every single morning, right? So if we get a nice opportunity, say 420, and then it stops at 4 off open, it flushes down real fast. If it goes to 350, I want to assume that it's going to hold. Because a lot of times what happens off the open is it flushes out, comes right back, right? A couple minutes later. Or if it ramps up, stuffs, comes right back down a couple minutes later. So a lot of times you will feel good about a trade for 2 minutes, and then all of a sudden you're screwed. So be aware, just like I treat the pre-market trades most of the time different than the full day trades. I'm always before 9:45, 10 a.m. If I get the move I'm looking for, I go ahead and typically lock in all, if not most, so that I can reevaluate after 9:45 and 10. I try not to have a bias for the day until 9:45 or 10 because it's still identifying the market for the day in those time periods before 10 a.m. So that's CLVR. CLVR. And then Tilray, higher the better. I mean, it's going to be, we've got a catalyst play. I forget what day. It might be Tuesday. I'm not sure offhand. So don't quote me on that. You guys can check. But there's obviously the vote. And so whenever there's a catalyst play, there's always more bids than you think because people want to get, in for that, the run up into it or, whatever. And, unfortunately I had 6 10s on this and it went just straight up to 7. So I thought I was doing the right thing and selling. I sold 75% of it before close. And then it went, nuts after hours, obviously. So I missed out on a pretty big layup. Sometimes I forget how early that we're actually in, especially if you participate on that first candle of whatever the news was, etc. So, but one thing that I was telling the room on Friday and on scans on Thursday night, Tilray might be like the AMC where, it's got these knee-jerk reactions and it's going to really fool you as a trader if you are, new, starting out, and even if you're great. But there's other trades that you can take based off of Tilray. You can trade CGC. You can trade ACB. You can trade CRON. And maybe they won't have as much liquidity. Maybe they won't be as crazy. But it's safer, cleaner, nicer, more friendly to the end user, such as yourself as the trader. So just think about that. But let's see what happens. I mean, whether or not we have a gap down or we go to 9, I don't know yet. But it's going to be a great reactive trade. I will have a plan by 8:50 a.m. based on the pre-market action. But again, you want to be cautious. You don't want to force a trade here, but there's liquidity right now. So the key thing about when names have liquidity, don't be a hero. Don't try to get this whole day move. when it stops going in the direction that you were expecting, when it starts to, go sideways, use that opportunity to size down because you don't know if it's going to come all the way back, right? We got a nice dollar per share fade on Friday on whatever size you wanted. And then as it started to shift in base, it went another $1.20. So just be aware of that, especially when there's a lot of volume. IMTE, I've been watching. This one feels a lot like, the other ones that we've seen. We had like Jewel. It actually really reminds me of Jewel. So they did a raise, and so they had been running it up. They did a raise. It came down hard. My thought is that they're probably they did the raise. They're holding all that stock and they're walking it up. And at some point, we'll see a day that it has, 5 million volume early or more. And then we'll have the liquidation day. Just my hunch, but we'll see. I have zero interest in stepping in front of it. I had a nice little exhaustion move on Friday. I didn't trade it. There's an edge there, but again, that's a great. You can nail a trade, and it might be an okay trade here and there. But it's not something that you can really sink your teeth in. And for me, that's where I want to put my focus these days. I want to focus on the A+ opportunities. I don't need to mess with all these other little ones. So I am watching that. I have it on failed follow through, but I'm not looking to just short it every single day. I'm just looking to keep it on radar, set price alerts, and wait for it. A couple others that I've been watching. RBLX is back in the, kind of post-exhaustion stage. So if this starts to firm up, then, obviously be careful. But, the market is currently in bear market squeeze mode, right? It's unwinding the obvious move. It was obvious that interest rates are supposed to take it down. It's obvious that war is not good for it. It's obvious that all these things are negative. But everybody sells out, positions, hedges, does the obvious move, and now they unwind it back up. So, this is, again, kicking the can down the road, but I'm not here to wait for the market to tank. I'm not here to time the market tank because, I'd be waiting probably 10 years, or 15 years now. Minus COVID, with the exception of that, if you've been trying to wait for the top, you've been waiting for a long time. But RBLX and AFRM, same deals. I'd be looking for a fade. Just there's relative weakness here. So when the market starts to pull back, I'd probably focus on these. The other ones, Tiger has been fantastic for us. IQ is setting up like a Tiger, and then DD. So ideally, we have some opportunities there. And higher the better, and looking to just kind of do a 9:45, 10 a.m. type trend join. I do think that IQ could end up a lot like the DD and how it played out. But a lot depends on, is Baba gapping up, Baidu gapping up, and what are the headlines that are coming out. So any of this can change with one headline, overnight. But from an intraday perspective, I'd be looking to trade that. Tiger, I like with FUTU. Trades in, pretty much tandem. But that's been a great trader the last couple days. That was the main watch. I think it was either Wednesday or Tuesday. Right over here. Wednesday. But nice blow-off move and then unwind all day. It was the same day that we had NKLA. Same deal, and you can see pretty much the same kind of tabletop, peak out, and then unwind. So those were two fantastic trades. And that's what I'm looking for on these overextension type trades. Same deal with LAC that was on scan for Friday for the trade. I'm not looking to just jump in front of these names, but when they set up and they give you a parabolic move off the open, such as Friday, that gives you an edge. It starts to come in and unwinds. Doesn't mean that it's going to, down 20%. It just means they're going to take a break before it potentially goes higher. And you saw that on X. The point here, I'm looking for overextended charts that just need a couple days of a break, right? Same thing with CLF. Doesn't mean that I think that they're, going lower from that point. I just think they're going to take a little break, and we take advantage of that and then move on. But so far, these things have been going nuts, which, should be kept on radar too. Last section is continuation. As you guys know, RAVB has been absolutely fantastic. So this one's starting to remind me of SES, almost the same kind of situation setting up. And then we saw it on Dave, where came off the they switched the ticker. It's now the company instead of the SPAC, and then goes nuts after high redemption. So. We're starting to kind of do the same thing, and we've got a couple days. Obviously, you guys know I've been long since this day over here. As usual, you should be selling into 80% moves, 100% moves. So nice blow off move to the twos. We had it again over here, but they kept on doing it. They kept on kind of grinding it. So we've had a liquidity trap, and then squeeze out, liquidity trap, squeeze out, liquidity trap, and now we're on that next one. And if you went to if you looked at it on Wednesday, it was like, wow, that thing hit 288. And, maybe I was upset I didn't sell as many. And then all of a sudden we're back to 288, or whatever. Yeah, 288. So double top so far. So that's the level. And if it goes over 288, then maybe you get into a circuit and it goes, 320, 354. We don't know. But it does appear like shorts are on the wrong side. And once again, I will remind you, this was an idea at about 109 or 119, I forget. So I'm speaking from that bias. You guys know that I've been swinging it. It's been on scan, every now and then, and since that time. So this is not an idea, tomorrow, but I'm just thinking about what I think could be, that blow off and how it would look. And, if it does cruise through that 288 and, triggers a circuit, we could be looking at one or two circuits into four. So we'll see what happens. But as always, if it went nuts, I'd be looking to shave some off. But I've been letting it work, and it's been a swing trade, and that should not be a surprise to anyone. So this Netty has been Netty. Put in the old ticker. Netty actually was Mullen, first off, but the connection. Nile is what I meant to say. But Nile, I participated, and the reason for that is because of the relationship with MULN, which used to be Netty. Nile used to be DPW, if you guys remember. And so DPW, let's see if we've got the daily. Slow, steady fade. It's had a history of crazy moves, but the reason why I was interested in Nile is because Mullen just went. And Mullen, Nile owns part of Mullen or whatever. And so I just felt like maybe whatever the fund is that's doing that is moving on to the, this one, and maybe they'll go into the next one, because obviously they're all kind of interconnected with all these different, it's almost like a shell game, but I'm not complaining. So either way, the one thing I liked is these huge moves intraday, and then these slams, and then the recovery. Huge moves, slams, and then the recovery. That's going to work out size. So that's why it's kind of convincing me that maybe they have a plan here, because they're letting everybody chase and then slam it on them. So same deal. When I got long in the pre-market broadcast, when I was buying at 72 cents, my goal was to kind of risk 68 to 70 cents and kind of let it work. I don't want to ruin my average. And the trade may fail, but the people that are chasing it up and, oh man, I missed it at 75, 78, 80, I'm going to chase it at 85. They're getting chopped up. They're the ones that's selling down here. So ideally, I'm going to let this work until it doesn't work. But I think that if it starts to firm up in 80, 90s dollar, then there's, you could probably suggest that it's similar action. I'm not saying it's the next Mullen, but similar kind of bid team, the folks that come in there and rip it up. So we'll see. But again, I'm speaking from a lower average, and I would stop accordingly. If it ramps up, just like it did on Friday, I will shave some off. At the end of the day, these are all trash, so you don't want to get, too overly confident. RATA, looking for a trend join, no position, nice action, nice chart. CRXT, example of a liquidity trap. No position, something that I would consider possibly, but I just wanted to kind of throw it on there to once again show you guys a liquidity trap, and what my opinion of it is. It's a term that pretty much coined at a Traders for a Cause event probably 2 years ago. So, and it's becoming more and more of a trade that we see on the regular, and that was REVB, and then you also have CELZ, which is forming similar situation. A lot of people ask me why I didn't like CELZ as a liquidity trap, kind of breakout squeeze. And the reason for that is just because we're at this resistance, right? So this had some high volume, 64 million shares. So I need to see it prove and basically kind of base at this 360s and pretty much confirm that it wants to really, really go. Otherwise, I want to assume that it's going to fail when it breaks out. Just because you're under, some pretty good resistance. And you can see that 388 was the high here and 390 was the high here. So there is definitely a seller, an inventory of sorts there. And I want to be cautious of that. But definitely another one of those setups. REVBW is another way to trade that REVB as well. Last two, ARTW. Again, just like before. You guys know I've been swinging this for quite some time. And, you have that huge candle. In my opinion, I like to adjust into huge days like that. So that thing went to like 770s almost or something. Yeah, 770s. Big move from under, 5. And good volume. Again, you can see the 2 million, then it goes down to like minimal volume. So if you're chasing this thing, you're going to get smacked. It's super low volume. The volume has been increasing, but again, and I think this day was actually like a Discord kind of situation there. So, it gets crowded on one side, so you got to kind of let that play out. But again, lower type volume and nothing to chase, as I said from day one. But, this buyer in the tape is what interested me to this name. And it's since, pretty much doubled from the point where, they pretty much took it up the next notch. Last but not least, SYTA has been a nice little grinder. Nothing I love, but 150 is the next trigger. 125 was the first one. So you want to assume that it's going to fail until, it proves otherwise. But if 150, if it gets any news, 150, 180, it's the type that can rip. But again, any big moves, I'm a seller. If it starts to break down, I'm a seller. But again, speaking from a 118, 119 type of average. So that is it. Staying familiar section. I've got a few others that, just should be familiar with. Like I said, ACB, CGC, all those ones are all potentials off of Tilray. So you don't have to trade Tilray. But that's about it, guys. Have a good rest of the weekend, and we'll catch you Monday.